whatever you want to call it, no matter which way you slice this. Hey everybody, what a crazy day. So the selling continues after hours, and I want to go through a couple things. I'm going to go through some buys. I have some sells for sure that we should cover for tomorrow. But I want to just pick up right here and start with Bitcoin. So we're breaking now, and I filmed this earlier, and then I'm refilming it so that people can see this, because this is way more important. And I would really suggest that you watch this entire video. And I would also ask that you could possibly share this with people via your social media. Very rarely do I ask that. I don't run ads. But people need to kind of be aware of what's about to happen, or what I think may happen. Let me rephrase that, because no one really knows. But see this break right here on Bitcoin? You need to watch this, okay? Your next level is 20,000. Now, this could absolutely flash crash after what happened with Luna. And to say that it can't is just silly. And let's go through this key level right here. This is when the inflation trade started. This is the day and the weeks that you had people like Paul Tudor Jones coming out and saying, you know what? This actually makes sense to buy this here as an inflationary hedge, right? And the Fed started doing what they were doing. Okay, this is where you were during pre-pandemic levels at 3,700. You're still 10x that pre-pandemic level. So let's focus on this and where we're at. See this line right here? This is your anchored VWAP. So this is the average weighted price of every trade on a weekly chart. See that? We broke it last week. I went over this in, I believe, the top 10 video. But see how you're coming down right here? There's no support. Left shoulder, right shoulder, head. Okay, double top, whatever you want to call it, no matter which way you slice this, it broke. Okay, so if you come right in here, because wicks are price rejection, we know that, right? Come right here, you broke. So whether you're saying it broke the head and shoulders, whether or not you're saying it broke the double top that's right there, either way, it's broken. Okay, that's not really up for debate anymore. So where can this go? Well, this is the level that's breaking, and this is where your support is. You don't have anything till down here. So if you want to look at this another way, what you could do is clean this all off, get rid of these lines, and just put fib levels in. And all you want to do with fib levels is pick the peak and pick the low of the weekly chart and see where you stand. And you can see how you're right on the level, on the fib level that we're talking about. You can see how it respected that line, and you can see how this basically puts you in the same exact level that I just said, around 19,000. So I think it's very realistic for this to come down and fill that gap. It's trading just like tech. I mean, we can call it whatever we want, but it's trading just like tech. So we should treat it like tech. And expect this to come in and come down to 20. Now, what can you do? Well, one of the names we were trading in the trading room today was MicroStrategies. We were using this as a short. We did very well with it today. I don't think this is done. As a matter of fact, after hours, I may actually try and get more of this off. I don't see any reason why this is going to bounce, or why Bitcoin's going to bounce overnight. I mean, jobless claims is tomorrow. Is that miraculously going to lift Bitcoin? I don't think so. So I'm gonna look at trying to get this off. If you don't do after hours, or if you're listening to this later, all you want to do is just focus on this level tomorrow, because if you break this, you're probably going to keep going. That's going to put us at 165. You break 165, it's risk on. 146 3/4 is your first stop. You break that and you could go down into double digits. This can go to double digits. If you don't believe that, you're not paying attention to what's going on out there right now. BITO is another way to take advantage of this. The ETFs taking out all-time lows. You can short that. Mara, you can short that. Any of these names that are associated with it are going to get slaughtered. They are going to continue to get slaughtered. They're going to go to levels that you do not think are possible. Okay. Remember, Riot in 2018, by the time we were done, it was trading at $1. Okay. So to think that you can't get back down to this level, well, 58 cents to be exact. So if you think it can't get back down to that level, you're wrong. It can. So focus on that, and focus on the amount of risk that people are still taking on those names. That's the big part of what I want to cover. Now, there's some other things that are going on out there which actually give me hope that when we get washed out, then that's going to be the end of it. Let's just clean all this off while we're here. So I really want to focus on SARK. So this is something from the newsletter. If you don't get the newsletter, free version below, just simply click on the link in descriptions and you will get it. See this 7780 level? If you flip this after this upper channels are when we go parabolic. We're there, we flipped. 6450 from the newsletter before, we're up decently in that trade so far considering the market circumstances, but this could move. Now, 10% more would give us 8 points. Why do I think that this could give us 10% more? Well, just to get down to this level where there's support, let's go look at this on the weekly because it'll be cleaner to see what I'm going to show you. There's your trough on pre-pandemic levels. There's really very little chance that we're not going down another 10%. We go down 10%, this goes up roughly $8. This goes up $8, you're a very happy camper. So consider that trade, take a look at it tomorrow. Wheat is something that we've been playing with for some time, and quite frankly, we haven't made any money on it. But I think that's about to change. We just keep getting stopped out and getting frustrated. This is when we had the huge move from the war, when that first started, trading. Look how you're getting tighter and tighter and tighter, right? And a real simple way to just see that even clearer, just draw a line with it, and you can see how this is getting tighter and tighter and tighter, right? So you can see that. And what happens when this happens and you start getting tighter? Eventually, you're going to have to break out to one way or another. And I think that's exactly what we're setting up for here. Now, down here, and all you can see is that little break right there. This is what you're looking for. I'm going to walk you through this entire trade. Okay, flip that level right there, and that gets you through 1134. And if you break that low, 1093, you're going to just want to get out of the way. Now, if that happens, okay, go to 12 and 3/4. That's where I think you're heading. You have 40 cents of risk. I think the trade makes sense. This one's a little wonky and a little different. So we had the CPI come out today. CPI was 0.6. We were looking for 0.4. Frankly, the CPI that I look at is with food and energy, not without food and energy. The cost that everybody's concerned with if they have a family is how much is it to take the kids to school? How much is it cost for me to make dinner, right? Taking those costs out to me just doesn't make any sense. But they take them out because it makes the picture look pretty. That said, when we focus on something like this, this is a 20-year bond. You know what we saw today? We saw this actually do what? We saw this actually rally. We saw people buy bonds for the first time while the stock market was going down. We haven't seen that. So this is a pretty interesting chart for me because I'm at this key level down here. Now, if I put some indicators in, and I want to just show you this. This line's drawn perfectly wrong. So let's put that there. See this right here? I've got a positive RSI divergence. Put the 5 in and the 8. Okay, here we are. We're above both the 5 and the 8. Every single time it has not really held for the past 3-4 times. This time you went from 136 all the way up to 142. Not exactly what I'm looking for, but I'm looking for this to get some kind of bottom. And I think it's realistic. Now, why am I saying that? Take a look at this, and we're going to spend a little time on this. Let's get rid of these indicators. So here's the pandemic. Here is the high of the 20-year bond market. Here's the low of the 20-year bond market. During that time, we have a 22% move. You know what you have during this time? You have a 27% move. Okay, this should be a little tighter. It's 27%. You are more volatile now and selling down more now with more of a drawdown than going through the pandemic. Okay, so you're really at these levels that you were in 2018 before they raised rates. Pay attention to this. This does not last forever. This is a really good segue into the bond market, but I want you to make you aware of this disaster of the day. So Bros came out, and then we'll do the bond market. Earnings were a disaster. Stock sold down today. It looks like it may have leaked. There's some other disasters out there as well. You might have seen the Beyond disaster. I'll cover that real quick. But what you want to focus on now is this 15-minute chart. You want to focus on this pre and post, focus on these levels. You want to short it if you can get up to 35 or if you can get to that 25 level. Always use these 15-minute bars. Watch where they hit on the 15-minute bar. You formed a hammer. When you break the hammer, it doesn't go very well. So this is probably going to roll up H and come back down, but I would at least need $25 to put that short on, and I should probably just throw this one out there as well. This was just an absolute disaster, which is not surprising. Their bonds are trading at junk status, and they're basically trading at a default level. So always look at the bond market. You might want to remember this. Always look at the bond market and what they're doing with your bonds. If they're knocking your bonds down to 40, 50 cents on the dollar, your company might not be around very long. And that's pretty much what this is telling you. But I don't really see a play here. I'm just throwing that out there because I know people will be looking at it. Let's talk about the Qs. We broke. Question becomes, how much longer is this going to go on? I'm not sure, but it's getting really, really easy to short. And as long as it continues to get easy to short, stay to the end because I'm going to go longer. I want to show you two different data points that you're not going to see usually that I do. But you see this right here? I think you can get to this 280 line, but it's getting really easy to short. I'm making way too much money on the short side. I'm not that smart. So when it starts to happen, you need to pay attention to it. It's just getting too easy. And there's two indicators that went off today. See this? This could get to 383.90. And I just want to show you this. So this finally broke the socks. So realistically, you're probably heading back down to this level. The only trades that are really working for us in the trading room are the energy trades, and they're working. Okay, all the energy trades that we added to for the second time, the first time this week, they did not work. Second time's a charm. So a lot of people have to think about that. You need to keep your ideas. Just because they didn't work the first time doesn't mean they're not going to work again. XOM looks great there. Now, XLE, just this is the index. Nothing else matters. This is the only one that looks like it's worth anything. AMR, I mean, this bounced. Again, if you don't get the newsletter, there's a free version below in the description. And please like this video because it does help me with the algorithm. But there's two more things that I want to show you, two sources that you're not going to see very often, but I'm going to show them to you tonight. Just give me a minute to get through this. See what's going on here? 292. Look at that. So in other words, bad numbers. They're going to raise rates 50 basis points. Bullard came out and said it next two times, 50 basis points. Came out and said it again today. You're at 292. What's that tell you? One, they're either not going to raise rates as much as they're saying, or two, people don't care and they just want to buy support. They just want some kind of yield. And after what just happened with that Luna and the stablecoin, where are they getting yield? Right? So you have to think about all these pieces. It's all connected. Now, stay with me. So we're going to wrap it up with something that you probably don't see very often. This is called T2108, and this is percentage of stocks above the 40-day moving average. What's important about this is it gives you a really good indication on where you're at on stocks above the 40-day moving average. Why is that important? It can signify when you're bottoming. It could signify how negative that you are. And what you're going to see here is every time that you get below 20, it starts to put in a bottom. Okay, it doesn't mean that you're bottoming, but it starts to put in a bottom. Today's reading is a 12. Okay, so if you take a look here and you go across and see when was the last time, when are the other times you were at a 12? The pandemic, 2018, when we had the massive sell-off, right? So only a couple times when in the past 4 or 5 years you've been down this low. Now, if you go across to this, you can see what I'm talking about. So I'm just going to get to that level again and just show you so you can see that. They're the only times in this period of time, so about 6 years, that you've been this low. When you get this low, you need to start paying attention because a vicious bounce can happen. Didn't really happen viciously here, but it can happen. Now that's T2108, T2107, okay? Percentage of stocks above the 200-day moving average. Whenever you get to 20, that becomes the start, meaning the actual start of when this could bottom. If you take a look at where you have been over the past 5 years, there were only 2 other occasions when this has happened. When you snap back from this, you get a massive snap back now because everything can't go below the 200-day moving average. So what this is telling you essentially is 80% of our stocks, 80% are below, right? The 200-day moving average. We're up here. You could see how it was much, much higher. If you do this on a weekly basis, just to give you an understanding, this is from the mid-90s. Going across, there's only 10 times, okay, only 10 times in history that we've touched this line that I have here, okay? And you can see when they are. The pandemic, the financial crisis, okay, the dot-com boom. Well, this was actually the Russian default. This was the dot-com bust. So you can see the times when you're doing that, and now you're here. Can it get worse? Absolutely. During the pandemic, we were at a 2. The point of what I'm getting at is that when you're here, it's starting to get to a point where it's just way too easy to short, way too easy to make money, and you have to be expecting that you're going to start seeing short selling rallies now. That's it. I know it's a long one. Have a great night, everybody. Trade to win tomorrow. Time frame. We are going to be using a 2-minute time frame. If you're not familiar with this, every trading platform has a 2-minute time frame. You just have to go in and change your settings. We are going to use a 2-minute time frame because based upon the movement of algorithms and high frequency traders, the 1 minute has entirely too much noise now. As always, we have to adapt to what is going on around us.